Markets rally yesterday on better than expected commentary from Jerome Powell. More testimony today. What does that mean for the markets and your money? That's up next on 3 Minutes on Markets and Money. Over the last few days, the market continues really to consolidate, coming off that really oversold condition that we had just a few days ago. Markets continue to hold these supports going back to the January lows. So really, all in all, the market remains in a very bullish position here. Sentiment extremely oversold. Corporate buybacks really stepping up here at this point. We have record levels of corporate stock buybacks going on. That's been very supportive of the large cap stocks in particular, helping them hold support here. So despite the fact we've got war, economic ruin, famine, interest rates, everything else going on, there hasn't really been a significant bear market at this point, more of just a correctional process that's been working through that consolidation. Now, there's still risk here to the downside to pay attention to. I wouldn't be surprised if we do wind up retesting some of these lower levels over the next few days. And again, there's just so many things that are weighing on this market all at once. But if the markets can continue to hold these support levels, we do have a shot at three important resistance levels on the upside. The first is this downtrend line that currently exists from the peak of the January market down to current levels. We've continued to kind of bounce off that downtrend line on advances. Now, where we are currently, we've had exposure here to markets, and when we get to that resistance line, looking to probably reduce a little bit of risk here, again, potentially re-hedge portfolios a bit, as there is potential for this market to continue to work in a downward trend line, at least for now. However, if we can't break above this resistance line, which is also where the 50-day moving average consolidates directly with this downtrend line, there is a shot at the 20-day moving average, and then above that is going to be an attempt at all-time highs. Now, in order for that to happen, we're going to need some good news, such as withdrawal of troops from the Ukraine or a complete reversal of the Federal Reserve at this point, suggesting no more rate hikes and a maintaining of the quantitative easing programs. Now, that's a bit of a far stretch here with inflation running as high as it is, which, again, this makes this much less likely of a possibility. Doesn't mean it can't happen, but there's a lot of things that have to go right in order for us to get a rally back to all-time highs. The most likely outcome is going to be this kind of continued downward trend, at least for this moment. And if we do start to break major support levels, that does open up the possibility for a bigger correction in markets. And that's worth paying attention to, at least for now. That's 3 Minutes on Markets and Money. I'm your host, Lance Roberts. See you tomorrow.